This is Mike Reed with cEntellect, and this is my weekly crude highlights and price view. I'm bearish for the second consecutive week. The trade is currently up 5.7%. I'm really bearish on three things. The first is the crude complex demand in the United States. So this is everything: gasoline, jet, distillate. I think the crude complex is currently down 2.7% year on year, coupled with gasoline demand has actually come off for the first time since 2012. So I see demand down on rising price elasticity. The second reason is last week's 12.6 million crude draw, I think, is actually bearish. And why is that? Because embedded in that draw was a 16.5 million barrel shortfall in transfer from lease to commercial stocks. Let me go off on a sidebar on this. In October of 2016, EIA deleted lease stocks from the weekly crude forecast. When they deleted that, since then, the lease to commercial stocks transfer, or lack thereof, has been the most volatile of the 7 drivers of the weekly crude stocks release. So let me put this another way. Last week, a minus of 12.6 million draw. If I adjust that for the plus 16.5 million that did not transfer from lease to commercial, I end up with an actual build of 3.9 million barrels. And so I think last week's draw was actually a bearish signal. And the third and final reason is the WTI to Brent spread has collapsed to $3.70. That is collapsing exports. Exports have been significantly down the last 2 weeks in a row, and I expect that to continue. So for that and much more, please visit us at cEntellect.com.